Welcome to the July 26, 2021 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with your weekly fast-paced tour of the global financial markets. And what a week it was. It tells us a lot about the rest of this year and what's actually happening in the equity markets and the bond markets, and it leads to strategy conclusions. And here we go with the Dow Jones Industrial Average hitting 35,000 again at the end of the week after a Monday meltdown. You could see it right here. This was the meltdown in June. We went nearly to 33,000. We went below 34,000 briefly on Monday. People thought, uh-oh, here it comes. Same thing happened back right after the 35,000 at the end of April. You had a similar correction. Why did this reverse so fast? And what happened in the interest rate market, and what does it tell us? This is the reason. This is basically 118 of 500 companies. That's the S&P 500, largest companies in that index. And 118 of them have reported. Well, the earnings that you see from those companies were nearly double or over double last year, about 120%, and they were 20% above expectations. So you had two different versions of records there, and of course sales surprises were to the upside as well. What that chart tells us is that this was fundamentally supported by what companies have actually accomplished. There's another 27% prediction for earnings increases here in the third quarter that would be announced in October. So you're back to game on with companies delivering the results, companies actually showing full recovery with distance. Now these earnings are about 12% more than the peak, which was actually back in 2018. Yet the market's up about 30%. That's called multiple expansion. What you pay for earnings or dividends, you've had multiple expansion. This is earnings contraction that we just saw because the earnings are rising so fast and the Dow's been stalled at 35,000 or less since the beginning of May. 90 days. While the Dow has essentially been stalled at 35,000, what's happened? Well, I wanted to highlight the leading sector for 90 days is healthcare. You saw 52-week highs on Bristol Myers, all-time high for Eli Lilly, and that whole sector has come in favor in a very powerful way. Real estate woke up because office downsizing and defaults on rents have not been as big a factor as what was previously thought. Energy, which had led the charge, has gone back to the middle of the pack in 90-day performance after hitting a big peak right here. We'll get to crude oil and what happened on Monday and the rest of the week and what that tells us here later in the charts and graphs. This is top 10, bottom 10. Moderna, the vaccine maker, at the top of the list in performance this week. HCA Healthcare, shout out to Texas or North Texas-based Tenet Healthcare. They're up 79% for the year. HCA, similar company, up 12% this week. Etsy, Enphase Energy, those are in the top 10. Netflix, a disappointment from what was expected, and you can see it all the way down to some special disappointments in what was supposed to be reported. Not much there in terms of intelligence, but here we go with the 10-year Treasury, and this is way important. We actually hit 1.8% on the 10-year Treasury. That was the inflation anticipation rate spike, and that the Fed would change posture. They said no, not until everybody's got a job that wants a job. Well, here you hit 1.15, and that was on Monday. Everybody was scared of the Delta variant. The earnings reports were so strong, Bill Ackman came out and said the boom is still intact, but interest rates hit the lowest that you could see almost all the way back to the start of the year. So interest rates spike, not yet. That's what it tells you. It also tells you traditional fixed income strategy is not going to work if you've got 10 years of duration risk for just 1 1/3% at the end of the week. That doesn't make much sense if your target return is much higher. And so a big part of the fixed income world needs reallocation. The high yield space and the floating rate loan space appear to be much more attractive because we haven't seen the defaults materialize that were expected during the pandemic. All right, this is the natural gas futures. $4 per million BTUs. What does that mean? That's the highest in 7 years for this time of year. And remember, if you go back 7 years, the shale revolution was just beginning to produce excess, if you will. So those supplies have tightened up. Liquid natural gas exportation exploding to 15% equivalent to demand in the United States. That's huge. Natural gas never did really have a dip this week. Crude oil. Support was 66, according to Alex Tolene, the prophet here at McGowanGroup. And sure enough, it hit 66, came right back to 72, not too distant from where it began the week. So does that uptrend continue? Goldman came out Monday and said they expect $80 a barrel oil. JP Morgan said there are some big short interests that could make a short squeeze possible in the energy sector. It should regain its footing as it did later in the week. But the medical dividend companies rising over the past 90 days to the #1 sector. I'm Spencer McGowan, President, McGowanGroup Asset Management. We look forward to serving you from right here in the Crescent. You can fill out your preliminary client questionnaire at networthradio.com and come down to meet the team that cares or schedule your Zoom call. We look forward to updating your plan for 2022. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week networthradio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.